You're watching today's video technical update presented by FX Times. It is Friday, April 2nd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. This week, the dollar Japanese yen confirmed its return to strength. The euro and the pound also rallied against the ailing Japanese yen. Both the Aussie and the Canadian dollar yen continue to be strong, although the Aussie yen is the first to test a long-term power line. This video is being produced at about 2:45 p.m. Eastern Time, near the close of this week's session. First, let's take a look at the dollar Japanese yen pair, as this was a second week of strong rally. The last week, the market broke above intermediate and long-term declining trend line, while this week the market broke above a intermediate neckline here for the reverse head and shoulder. And the break here suggests the target right above the 61.8% retracement. You see here a swing projection here goes to the 96 area. Okay, so there might be some resistance there, but the 98 area and the 100/101 level are the next two resistance levels after 96. Now looking at the daily time frame, we could see a possible resistance here, and a decline from there could establish a pullback, a throwback, and a throwback would confirm our intermediate term bullish attempt. And from there, we may, if there's a rally, it doesn't have to be right here at the 93.70 area. What you might want to do is go down to your 4-hour time frame using this set of Fibonacci level and project some kind of it may go down to the 50 level percent level right on top of our 92 top here. So that could be one of the scenarios. In any case, it's important next week to see topping action near 96 or below, and from there you want to wait for this throwback. And continuing the rally, you want to follow resistance areas such as 96, 98, and 100. Also, the stochastic in the the RSI in the weekly, you see how it has stayed below 60 in the declining mode, and if the market breaks above 60, that's another confirmation for you for the intermediate term bullish attempt. The euro yen is the next on the list, and you can see that the euro yen has been weak. However, it's not coming off of a major bottom here, but we do see some bottoming action here just above our 78.6% retracement. The market is rallying and testing our previous support areas and testing them as resistance. Also, our declining trend line will be tested soon. So if the market breaks above this trend line, we may be in intermediate term rally that may test this previous high near 138.70. So looking at the daily for a closer inspection of this pair, we see this reverse head and shoulder break our neckline and the market continuing to rally. You see that we may be testing 129 very soon, and that's going to be an important level next week, as in the daily it is a test of our declining resistance and the 200-day moving average, while the RSI approaches or is nearing this overbought area. So monitor this area for topping action and continuing decline towards here the 78.6% retracement around 118.65. Now the other scenario is that the yen will continue to be weak, and the euro yen may actually break above this declining trend line, and we may have further sort of consolidation. As you know, the euro is a very weak pair at the moment. So is yen, but the yen is but there is some kind of euro strength this week, but that there's no intermediate term indication of that. All that is short term, so keep this bullish attempt in the short term until it could break this declining trend line. Then it could be an intermediate term bullish attempt. So again, just to summarize, look for topping action here. If it breaks instead of topping, look for a rally towards our previous high here. However, if a decline follows, look for it to continue declining towards our 118.60 area or the 78.6% retracement. Here's a quick look at the pound-yen pair, which is in a similar situation as the euro-yen pair, rallying from bottoming action, but not from a major bottom. It is testing a declining trend line at 38.2% retracement, and if it breaks, it has intermediate and possibly long-term bullish indication towards 177. However, in the intermediate term, we may see some resistance here at the 61.8% retracement at 151, 150 area. So now that's the bullish outlook. That's if these declining trend lines break, and you see that more clearly in the daily time frame, and it is testing it now. So starting next week, monitor this 144, 145 level for a breakout. Otherwise, a decline may indicate, here looking at the daily again, further decline may head towards 130, which is this 78.6% retracement level. So those are the two possible scenarios, pending whether or not the market breaks this declining trend line. Here's a look at the Aussie Yen pair. You see this pair has been making higher highs and lows since 2009. It is now testing a 200 week moving average, as well as a 61.8% retracement around 86. The next resistance area is this 94.50 area. But you see right now it's at an important power line as well. Okay, so let me make this a little more visible. This is an important power line for the market to break. I guess the 89 area. So if the market breaks above 89, it may go to this 94.50 area in the short term. Now looking at the Canadian yen pair, if I could just find that quickly here right away. There you go. The Canadian yen pair, however, is about 400 pips from the major power line here, and also the 200 week moving average. So both pairs are strong. Canadian yen pair is not testing any resistance yet, while the Aussie yen pair is. So there's more, we do have more room for the Canadian yen to move until the next resistance. And you see here, actually, let's use the latest swing here, this swing. It is breaking our 61.8% retracement, and you see this next, at the 98 area, we are going to test the 78.6% retracement. And that's all for the week. Visit fxtimes.com for the rest of this week's analysis and stay on top of educational and informative live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.